Welcome to CDC's Insight program, a series of talks that aims to share practical lessons on private sector investment and development based on experiences, knowledge, and research. My name is Colin Buckley, and I am your chair today. Before we start, let me remind you that we will be taking your questions later in the program, and so I would urge you to submit your questions as we're going through the chats by using the Q&A button at the bottom of your screen. Today, we will again consider the impact of COVID-19 on Africa, and recent events there have only underlined the ongoing significance of the pandemic in Africa. However, it's important that we put COVID in an African context, one of economic success in the past, of demographic opportunity and risk, one of continuing challenge. The short-term effects of COVID ought not to overly distract us from the patient task of supporting private sector development and economic growth on the continent. And today, to help us consider those short and long-term horizons, we're joined by Dr. Frannie Léautier. Dr. Léautier is a senior partner and chief executive officer at Southbridge Investment, where she leads the investment activities of the firm. Prior to joining Southbridge, Frannie held senior leadership roles in a host of prestigious international organizations, including the World Bank Group, the African Development Bank, and the Trade and Development Bank. She's authored several books and articles and has lectured at Sciences Po, MIT, Harvard, and the University of Tokyo. Welcome, Frannie, and thank you for joining us today. I wonder if we could start out with this notion of context. And you've been investing in Africa now for quite some time. And I wonder if you would begin by giving us your reflections on how the investment landscape in Africa has changed over the time of your investing.
Yes, thank you, Colin. It's a pleasure to be here and wonderful to see you once again. I'm a big follower of your podcasts. I think the landscape in Africa has changed dramatically over the years. If you look, and I'll only look at the last 20 years in order to give the context. If you look in the early 2000s until around 2010, the investments were coming mostly from development finance institutions, working with foreign direct investment, with large corporations coming to invest in the oil and gas business, in mining, and to a certain extent in the telecoms business. But then after 2010, you see a dramatic shift between 2010 to 2019, where the telecom sector, media and communications pretty much take over and dominate the investing scene. And you see other sectors coming in, for example, focus on consumer products in the retail space, and also introduction to a certain extent of the transport and automotive sector, where people are investing more in that space. But then just before we got into the pandemic, you were seeing this very dynamic combination between digital assets and clean technology or green assets. And those were taking a huge amount of investment, and they in a way sort of hid the other dynamics that were happening below the scene. For example, investments in the housing sector, investments that were going to agribusiness and particularly to the food and the nutrition value chains, and investments that were beginning to happen in the health sector, pharmaceuticals, and so on. After the pandemic, there's been a deepening of some of those trends, particularly with the digital and tech sector taking over even more dominant as a position of share of investment coming into Africa. But also the beginnings of a very strong interest by pharmaceutical companies who are looking, not only the large pharmaceutical companies looking to invest in Africa, but also the smaller ones looking to see how they can produce intravenous liquids, the oxygen tanks and distribution of treatments that otherwise were imported from neighboring countries or from outside Africa, and a lot of investment going into manufacturing of medical equipment, whether it's ventilators or even the protective gear that is needed for the medical staff. So I think the trends that had begun got deepened by the pandemic, and some of the sectors shifted a little bit as investors focused on the portfolios that they already had to make sure that those companies got liquidity, and also reshaped some of their investment decisions if they hadn't made those decisions already, to focus on the emerging importance across countries. I think the second important thing that has changed is the sources of capital. I mentioned earlier on that the development finance institutions were playing a large role and have continued to do so, increasing their investments in Africa. And other sources were the markets, where a lot of countries, for example, went to issue bonds, whether they were social bonds or green bonds, or went to the Eurobond market, and that was used to invest heavily in infrastructure and other sectors. You had the appearance and growth of private investments, private debt, and private equity. And then another trend that emerged as well is micro investments by individuals, which was something that Africa had not seen, but in the last few months, 12 months or so, and particularly because of the pandemic, that trend has increased, and it has been enabled by technology. So I think a very dynamic scene with lots of changes and a shift towards sectors that are either digital or clean tech, but with a lot of diversity underneath that.
So thank you for that. I mean, that's a really great picture of, I mean, we've got a story of dynamic growth, of deepening capital markets, of new sectors coming up. Let's return to the effect of COVID-19. As you identified, it's opened up some new opportunities in some new sectors that perhaps didn't exist at that depth in Africa. But what is the broader investment climate now look for the average business in Africa in the midst of COVID-19?
So I think, first of all, when you look at the role that government played during the pandemic, that has pushed for certain trends that were bubbling at the bottom, and they've become very visible. For example, a number of governments used e-wallets in order to transfer directly to households or to support small and medium enterprises. And that has given a big boost to digital payment systems and all the mobile money and fintech solutions that had already started to grow in a number of countries, but they were deepened and spread into even more economies and going even deeper into rural areas and individual households. The other area is because of the impact of the pandemic on supply chains that were disrupted all over the world. Many African countries started to put emphasis and to create regulations and markets that allow investments into areas that otherwise the countries would have imported those products from. So you had a big push, for example, for manufacturing locally. A lot of products, whether it's in the pharmaceutical area, but also goods that were otherwise imported. There was a shortage of wheat in countries like Nigeria, so a shift to use other forms of flour, whether it's cassava or other sources. You had the importance of local sourcing, and that gave support to companies that were already doing that at a certain scale, like Twiga in Kenya, Twiga Foods, that has this e-commerce platform, but also sources from local farmers. And you get this combination of social entrepreneurs on digital platforms getting even more importance because you need to do that. A lot of cross-border investments. I was very surprised by one statistic. If you look at the intra-African trade and intra-African finance, or finance that goes from Africa to Africa, that had a big jump because countries started to invest in neighboring countries, of course, supported by the fact that the Continental Free Trade Area went into effect on January 1st this year, and that's boosted the opportunity to invest across. A lot of investments have also gone into retooling the aviation sector. You look at a company like Ethiopian Airlines that shifted from passenger to cargo, And it's one of the few airlines that's cash positive today because of that transformation. And then that boosted the investments that other countries were looking to make, for example, in airports that could then receive these supplies, including today for what is very important in the vaccine distribution, which has to go by air because of the needs for refrigeration and so on. Other big changes also took place in the hospitality sector, which was really severely impacted, because when you look at the job losses, between 40 to 50% of the people who are working in hospitality and tourism lost their jobs. And that sector has also gone through a dramatic transformation. You see, first of all, the bigger hospitality chains from around the world are buying in Africa. So there's a very active M&A going on, whether it's Radisson, Marriott, or Accor and other hotel groups who are seeing opportunities. But then the independent brands have also made transformations. They've become now centers where you can go and sample local menus because they create brunches on Sundays and picking up locally produced goods to offer a very unique menu. They are also hosting people who are traveling who have to be quarantined for 14 days, and that has become a business line for some of these hotels. And some of them have actually become business centers where you can run a video conference or a call center, and they've taken up this digital economy and responded during the pandemic. So I think that is another area that has transformed. And maybe the last one, which is one of my personal favorites, is the tourism sector, because Africa, a number of African countries depend heavily on tourism, but then most of the tourists stayed home. And people have been very innovative in that space, using virtual reality and filming and other forms of bringing live action to your living room. And therefore, tourists can still benefit and enjoy the natural habitats that Africa has to provide. And what is unique about that is, in some cases, it's even better than going on a safari, because you are able to get quite close to the life and even go zoom in into seeing insects and other species that you may not have looked at otherwise. So those are some of the major changes. And the biggest change, however, has been to the small and medium enterprises, because they are the workhorses of Africa. They make up about 90% of the African private sector. And they have had to suffer quite a bit in terms of liquidity issues, because the people who lost jobs were not spending anymore at the level that they were before. So the companies who were servicing a wider economy went into liquidity challenges. There were also issues around social distancing and curfews and lockdown that had an impact on a number of these small and medium enterprises. So they needed working capital, liquidity support, and some of the growth strategies for them stalled. And there are many other trends, but I will stop with those for now.
Yeah, I mean, maybe you've given us some really interesting detail about some of the sectors that may be either opening up as a result of COVID, or where we've seen innovation that have made businesses kind of COVID resilient. But I was wondering if you could sort of do a little crystal ball gazing for us. And as you look into the midterm, are there any themes that you see that may be coming out that would interest investors in Africa?
I think in the midterm, and particularly because Africa has handled the pandemic very well and has come out much less touched than one would have anticipated before, there are a couple of trends that I think are worth looking at for investors. The first one is all the demand that is going to come as a result of the continental free trade area. So you start with things like supply chain logistics, the need for warehousing, the need for industrial parks that are going to support all of the manufacturing that is being put in place, and the linking up of countries internally, which is not something that the continent had focused on before, because most of the linking was being for external markets in order to export. So this drive towards connecting Africa, I think, is very critical. So you take an example. The biggest growth in country-to-country trade took place in the East African region. And you have now levels of exports between the countries in East Africa that have surpassed even the period before COVID. So the COVID plus the Continental Free Trade Area are pushing for this investment in the trunk infrastructure, in the logistics supply chain, and the connecting investments that are needed that are going to boost investment even further. The second trend is the demand for energy. I think energy is a booming sector in Africa now because not only of this growth in industrialization and the demands, but also the urbanization of Africa. So there's demands in cities, demands in industry, and connecting up the rural areas. I was very surprised that the biggest, the winner in terms of the largest investment in 2021 Q1 has been the solar energy sector. So there are two trends moving at the same time with investment in this distributed renewable energy, but at the same time, investments in the trunk infrastructure that is going to be needed, the transmission networks, distribution networks, with these markets growing. For example, now you can sell energy from Mozambique to Ethiopia, and that energy trade is happening at the same time. So you see these dual themes. And I think this is, for me, what always surprises me on the investment side is the duality of African economies, from the very big to the small, the very dynamic and fast moving to the medium and slow moving, and then the very impactful in terms of transforming the way people function to those investments that bring in efficiency. Maybe one last trend that I think I would like to share, because it has been quite important, is the fact that Africa has to adapt not only to the effects of the pandemic in the rest of the world, but also to the challenges and opportunities that come with climate adaptation and change. And a lot of these investments are also being driven by what is happening in the technology space, the solution space, and the opportunities that are driven by climate and the need for adaptation, mitigation, and resilience.
You'd mentioned, let's pick up this theme of climate, and I'm curious about your thoughts about climate and infrastructure, because there is a relationship between the two, shall we say. And I'm just curious about your thoughts on how climate may form infrastructure investment going forward.
Yeah, so I'll start with the energy space, because that's the one where there's a lot of debate right now, whether developing countries, and many of them are in Africa, should actually use natural resources like natural gas and oil in order to develop their industrial sector. And one of the things that has struck me looking as an investment is that if you invest in the types of natural gas transmission networks, that actually positions the countries very well to take up things like green hydrogen. So the oil and gas sector, which has been classified as one that is not good for the environment, could actually be one of the big drivers, especially because Africa has offshore oil and gas, and therefore could have an opportunity to develop green hydrogen from those sources using natural gas as a transition fuel to take it there. So I think you'll see more investments going. You already have with the big investment by Total in Mozambique, and you see other investments happening in other countries around Africa. Tanzania is another one that may be coming along the line to exploit natural gas, because that's a very good way for the continent to actually transition to a hydrogen or other solution. The second area, which is also related to climate, is the innovations that are happening in architecture, construction, and materials. Because of the high demand for social housing, the drive to bring costs of housing down so that you get affordability are driving also trends on the architectural and the material side, which are providing really exciting opportunities for social housing. So companies that are in the design and architectural field, so that's a service investment, or those that are constructing using modular and 3D printing, which is another form that has become quite dynamic in terms of innovations in materials. And those that are using local materials that have better properties, which will be very helpful as Africa gets hotter and hotter with climate change, being much better to absorb roofing materials and walls that can handle the heat waves that we are likely to have. And then, of course, there is the investment to protect the infrastructure, like from flooding, which is another big investment area, and a lot of companies that are coming up now that are becoming very skilled in taking care of getting rid of excess water. So you saw that in Mozambique during the various cyclones and tsunamis that had impacted the Indian Ocean coast, and the need driven by some of the major investments that have been made there to attract these kind of small companies that can actually handle flooding and create drainage and support these kind of reparative construction products. And then I'm very surprised and very impressed also by other opportunities in the agribusiness area, whether it's drip irrigation that is tuned to the soil conditions, where you can have blending between the type of fertilizer that is needed and a big growth in the inputs business into agriculture. So the whole chain from production of agriculture all the way to packaging, because of the potential waste that takes place when you have flooding and roads cut off. So you have companies that are packaging food products, companies that are investing in micronutrients and the growth of food in difficult or zones where there is not as much water. So a lot of innovation in the agriculture and agribusiness space. And then, of course, health. I was surprised about how many innovations came up during the COVID pandemic. There's a book published by the UN which has the top 50, and there are many other publications that have come up as well, including publications by Marcus Courage in African Stories, which uncovers these innovations. They've gone all the way from robotics and AI to very basic technologies that give efficiency in the use of water and innovation in the way that energy is being used to deliver services, all the way to telemedicine and other forms of using digital solutions to get health. So I think there's a wide array of innovation, but the most you could say is it is digital and it is clean, but in the areas where it is not, it is supporting the transition towards that, or it is handling some of these emerging risks from climate change, like heat and new materials and new construction methods.
I think this is a great moment to introduce our second speaker today, who's Peter Myla, who's a coverage director for Africa at CDC Group. Peter's a member of CDC's Africa team, but he's resident here in London, and he supports CDC's equity, debt, and fund investment teams throughout Africa. He's worked in private equity, investment banking, telecommunications for 15 years. Welcome, Peter. I wonder if I could start off with a question to you, which is picking up on Frannie's discussion about climate and infrastructure. And I'd be curious if you could tell us, I mean, what has CDC been doing in this kind of climate infrastructure space?
Thank you, Colin, and good to hear from Frannie, especially about the on-ground innovative solutions in Africa. Infrastructure is the foundation of economic development. That's how we view it in CDC. Without reliable electricity, clean water supplies, efficient transport infrastructure, and widespread access to communications networks, productivity is stifled and incomes remain very low. Electricity in Africa costs households 3 to 6 times the global average. And 57% of households, or call it 600 million people in Africa, do not have electricity at all. I mean, let's take a pause here. That's close to the population in Europe without electricity. If the unconnected in Africa were to wait for connection through traditional grid, some might have to wait for lifetime. The question is, how could you connect the unconnected to electricity and leapfrog the traditional grid network? we at CDC, we're exploring investment in climate initiative technologies to promote economic growth and the well-being of previously underserved communities, to reduce reliance on wood harvested locally and diesel generators, which are both expensive and environmentally unfriendly. CDC has provided capital to home solar system companies such as M-Copper in Kenya and Uganda, PEG Africa in Ghana, Cote d'Ivoire, and Senegal. We have also invested in suppliers of off-grid for businesses, such as Metal Solar Africa, which has developed solar installations across South Africa, Kenya, Namibia, and the Seychelles. Colin, this is just the beginning. There is still more in terms of what could be done on infrastructure.
Thanks a lot, Peter. I wonder if we could also pick up some of the conversation we had around COVID. I'm curious, as a DFI, when CDC's investees were faced with the pandemic, I mean, what type of investments did CDC prioritize and is prioritizing?
You know, Colin, one of the most challenge, if I were to remember 2020, and that challenge is still facing us today, is how do you prioritize investment in an environment of lockdown, closed borders, and challenges of conducting on-ground due diligence. So within CDC, we came with 3 pillars. The first was to preserve, supporting our partners to safeguard impact and weather the crisis. Secondly, strengthen pillar to scale up response to the economic and health challenges of the crisis. Lastly, is rebuild, a long-term partner to the countries where we invest in. So how did we do that? What we noticed during the financial crisis was the following things. Large financial institutions pulled back from investing in Africa. And it's not only through 2020. I think even 2020 fast-tracked this. This has been a slow trend since the global financial crisis. Higher capital costs and increased compliance requirements are making Africa much more expensive for international banks. That is having a big impact on the availability of risk capital. The vast majority of global banking firms acting in Africa have withdrawn or significantly reduced their operations. Local African banking institutions have not been able to fill the gap. Furthermore, at this times, even now, the uncertainty and economic instability, they are more likely to channel capital towards big businesses or government, rather to the small, medium enterprises. They are the greatest losers. So at CDC, what have we done? I'll mention one of the transactions we have done last year. We provided $100 million risk-sharing facility with Societe Generale to boost African trade with a focus on Francophone West Africa. The facility will bolster trade finance in hard-to-reach and often overlooked markets such as Mali and Mauritania. This facility will provide critical funding to local importers of sugar and wheat, for example, supporting food security and helping companies through the current economic crisis. And that's what Frannie was mentioning, the companies on the ground that are struggling.
Yeah, Frannie, I mean, this is the second time that we've mentioned SMEs. You mentioned it, and now Peter. And SMEs, I know, is a focus area for Southbridge. So I wonder if we could pause here and just give us your thoughts on the importance of investing in SMEs in Africa.
I think it's absolutely critical, and I'm very happy to hear the examples that Peter has raised, because SMEs have a hard time finding finance. If a study done by IFC, which shows you billions of dollars of financing gaps country by country between what SMEs would need and what is made available. And so that is the number one area to bridge. And then within that, there is the particular constraint that women-owned and women-led SMEs face, which makes it even more difficult for them to get access. Secondly, what is really important to note is that a lot of the innovation that we hear and see about Africa is actually driven by SMEs, because they come up with new ways of doing things. They are innovating in a very constrained environment, and therefore they come up with efficient ways of doing things, which if you can finance that, you then can get to scale quite easily. So if you take, for instance, the mobile payment systems, which became very powerful and successful in Africa, they happened actually because they were the unbanked, and the best way and cheapest way to serve them was through these mobile payment platforms that allowed women and rural residents who were not connected to banks to actually start trading and saving using their mobile devices. And now it has become a trend for the entire banking sector. In fact, if you are not in the digital world as a bank, you might as well forget about the future today. It has become a main trend. The third reason is because they are the workhorses of Africa. They actually employ 70 to 80% of the people in the private sector are employed by SMEs. And one of the features of SMEs is that they are the first ones to get the shock when there is an external shock towards them. They absorb it first. So they also lay off people first because they cannot maintain large labor forces. But they're also the first ones to hire when the economy starts to improve. So as an investor, focusing on SMEs is very critical, because you ride the waves of economic development and you have a better signal of managing risk, because they are the first transmission belt when risks materialize. And then finally, I would say that the advantage of focusing on SMEs is the speed of adaptation. And when you look at the challenges that Africa is facing, whether it's climate-related, external shocks that come from the global economy, or even what we are dealing now with in the pandemic, your best bet for that adaptation is via the SMEs. So as Peter said, I think focusing on investing in SMEs, helping them deal with this short-term liquidity constraint that they have, and being there for the future, especially given the outflow of capital from the financial institutions and the absence now of external intermediary banks, because that's another feature. All the intermediary banks that are international are no longer intermediating in Africa. So you need to work with local financial institutions and bridge that gap for intermediation. And that means more support to financial institutions that work with SMEs or lend to SMEs, direct investments in SMEs, and also supporting trade finance from SME to SME. I think those three investments would create a huge boost, not only post-COVID, but also for the future.
It's almost impossible to talk about SMEs without talking about innovation, or frankly, the opposite. Talk about innovation without SMEs being the engine of that. And yet innovation always comes with this sort of penumbra of enhanced risk. So what is it that governments or investors can do to sort of enhance innovation and this kind of the sort of new generation of SMEs?
I think there are a number of things that governments can do, but also things that investors as a group can do. First is to create a space that lowers the cost of innovation. If you look at countries like Morocco, for instance, they've created these parks where companies can come and congregate. In Kenya, it happened by itself. The Silicon Savannah in Nairobi, which is a very dynamic space, which happened really on its own out of ingenuity. And those two are the type of solutions that really support SMEs to come together in clusters, learn from each other, benefit from the common infrastructure, and also be in a place where you can harness their innovations. Rwanda is trying to do that through Kigali Innovation City. So you have the structured solution like in Morocco, a sort of market-based solution as you have in Nairobi, and a combination of the two as you have in Kigali, which is really building up the opportunity for SMEs to innovate and go to scale. The second is actually finding the financing to go to scale. A number of innovations happening in Africa, if they had happened in Silicon Valley or in London or Frankfurt, they would immediately get financing. So I think this is another big gap in the financing array of instruments that are available for SMEs, from the seed investments and early stage investments all the way to growth capital and capital that allows companies to scale. So bridging that gap, and there's a role of government in the regulation to allow seed investors and early investors to thrive. I think this is a key area for government, but also accompanying those investors through blended finance. I think blended finance is a key role for government to support innovation. And then the last area would be education. I think innovation comes from the confidence and ability for individuals to take initiative and to go out there and try different things. So in Africa, this is a natural quality in all children and in all human beings, but sometimes the education sector actually kills that drive because of the way in which we educate our children, partly because of lack of resources, because it's very costly at times to educate people in a way that allows them to continue being critical thinkers and doers. So I think governments can focus on education reform to create that kind of individual, a youth who can come out there and continue to be critically thinking and innovating, and a very heavy investment in science, technology, engineering, and mathematics that are really driving the technologies of the future.
So Peter, Frannie has given us a kind of an agenda for governments, and obviously investors are going to be attracted by the returns. What's the unique role that DFIs can play around innovation in Africa?
Yeah, Colin, it's and this we have to look at it into different markets across the continent. And Frannie has mentioned certain countries that have already have the hub. And when you look at those hubs from Kigali to Kenya to Morocco, is because those governments, they've got more of deregulation and they've got easier reforms or advanced reforms. So in short, there are 3 countries, or even if we were to give others not mentioned, there could be 5 out of 50 plus. So deregulation and reforms in Africa could not come fast enough. Frannie, you mentioned that Africa lacks VC financing in comparison to global peers. You will be pleased to hear that CDC has committed about $140 million across 11 VC funds and $10 million across 4 early stage co-investment opportunities. This is just the beginning for us in CDC. And Colin, coming back to you about the role of DFIs, for me, I'm eager to be able to say, how can we mobilize more capital for us as DFIs to be able to fill that gap that is not even available today in Africa if you were looking at VC. So those are the few things, because we have to look at what is our role as CDC. What a provider of capital. We should be out there backing VC sponsors, giving them the capital they require to be able to support the SMEs, the innovation on the ground. So for us as CDC, I don't think we could do it on our own. We are open for business in mobilizing capital, both international, DFIs, domestic capital.
Thanks a lot, Peter. Frannie, I mean, again, you've given us a lot of granularity, and I wonder if there's a way to bundle all of this together. And I'm curious, when you go out fundraising, I mean, how do you sell Africa to investors, given their perception of risk around Africa? What's the big pitch on Africa to investors?
Well, first of all, I start with the vast natural resources that Africa has. Africa is a very rich continent. Secondly, it has a growing and very young population. 60% of Africans are under 25 years old. So this is a very dynamic group of people who can innovate, create, and contribute to economic growth. I talk about the fact that it's a continent and it has 54 countries and they are very diverse. But if you go one level deeper, you're talking about thousands of cities and millions of companies. So when you hear something about something happening in Africa, not to focus on those unique events, but to really focus on the diversity and opportunity that comes from millions of companies in thousands of cities in 54 different countries. I also talked to them about the fact that a lot of what you can do in Africa can be done in a greenfield space. Therefore, it's open for innovation, and there is a history of innovation and scale. And because the continent is large, scale is actually possible, not only within countries, because we are talking about very large countries. If you look at Nigeria, Ethiopia, or Egypt, these are big countries with lots of land and people, and therefore innovation within countries is possible. And now with the continental free trade area, you can now think of a huge market in the future of up to, if you look at the statistics that are being projected for the future, up to 1.5 to 2 billion people. And the other thing I usually focus on when I talk about Africa is the fact that it has a track record of managing risk. I give the example of Ebola. I talk even about the current COVID pandemic and how countries have succeeded in managing that. And I give examples of how the challenges that the average person in Africa faces and how they manage those, which shows a very astute risk management and managing within constraints, which means if you bring resources, financial resources into that space, innovation is going to take off. And then I give concrete examples of what has already happened, whether it's mobile payment system and the example of M-Pesa, looking at distributed energy and smart grids like the example of Mkopa, or giving solutions of social entrepreneurship that links farmers to markets, like the example of Twiga Foods. So I give very concrete examples that show that it's not just a story, it's actually happening, it has gotten to scale, and there is a wide opportunity to do more because of the greenfield nature of the continent and the ability to go to geographical, market, and population scale as well.
Thanks a lot. So COVID has cast a long shadow, not only here in Europe and London, but especially across Africa. And I want to finish up with a question to both of you, which hopefully is a more positive question. So I'm going to ask the question first to Peter, which is looking forward. What is it that gives you hope for Africa and African growth?
Colin, my glass is neither half full nor half empty. My glass is overflowing with opportunities. Given the large funding gaps left by the commercial capital we spoke about, the untapped African coastline for offshore wind development. So if you were to think about it, that there is little being done on offshore wind. And people are, each time I'm listening, they're talking about climate change. How do we resolve this? And I say, you can go to Africa, put an offshore wind at anywhere on the coast, and you could solve 1 megawatt. And then coming back from a CDC point of view, I mean, from our side, I'll go back to our 3 pillars. The post-COVID rebuild commitment to invest ahead of the curve. That said, at the start of this year, our CEO, Nick, made a commitment that CDC will invest over $1 billion in Africa in 2021. Another billion reasons to be optimistic about creating jobs and eradicating poverty in Africa.
Thanks a lot, Peter. And Frannie, if I can ask you, your message of hope.
My message of hope is Africa is young, Africa is creative, Africa is growing, Africa is innovating, and Africa is getting results. And I think this is not just stories, it comes from facts. So I'm very optimistic because of track record. And as an investor, track record is very important. I'm optimistic because of the balance between opportunity and ways to mitigate risk. So whether you look at energy sector or financial sector, there are many opportunities, but you have to be very wise and learn from the local context in order to properly manage risk. And I also think that Africa is actually stretching its hand across to the rest of the world and looking not only to integrate within itself, but also to integrate with the rest of the world. And therefore, it's a great opportunity to invite people to come to Africa and to work with this very dynamic, youthful population to develop the continent and to connect it to the rest of the world.
All right, thank you very much. So now let's move and take a couple of questions from the audience. The first one, Frannie, is to you. And there's been a lot in the press here in Europe about the gig economy, about Uber, and about the problems of informal employment. What are your thoughts about technology in Africa and the risk that it may fuel a sort of jobless growth in sub-Saharan Africa?
I think Colin, that's an excellent question. I think one of the results of recent surveys, which I was reading a few weeks ago, showed that when you look at the effects of COVID, for example, they have been very differentiated across African cities. Lagos has lost 56% of the people who worked in the informal economy are unemployed, compared to Addis Ababa, which has about 12% unemployed. So that made me think, why is there such a difference in the informal sector response to the COVID crisis? Once you remove the country responses, you find that it has a lot to do with the way in which the informal sector integrates with the broader labor market. So I would say technology in Africa provides an opportunity to actually structure the informal activity and give it a formalization so that it can succeed and scale. And this shows up in every area of introduction of the digital technologies. For example, if you look at the matatus in Nairobi that are now using mobile devices with mobile payment system, this is the high end of innovation. And therefore, they are individual owners of individual companies rather than gig workers. And then you have another dimension to it, which is being able to provide jobs in new sectors where these jobs didn't exist before in the market. You find a lot of young people who previously would leave the rural areas and go to the urban areas to work in the informal retail sector in cities. You find them standing by the side of the road and selling things because that's the only way they could make an income. But with the introduction of these new technologies, rather than them being gig workers, they're actually able to use their ingenuity and join up in e-commerce platforms to photograph and produce their products that can be purchased through a WhatsApp message. And they're being able to actually integrate and formalize and use these technologies to deliver a formal service. And the last example is the creative sector. I am very impressed when you see, for example, the music industry. Today, if you are in the music business and you haven't signed up an African artist, you are missing the next wave of music. If you are in the movie business and you haven't worked with artists and actors across Africa, you are missing the next wave. Similarly, for the fashion and food industry, with a lot of creativity in new textiles, new menus, and all of that is being driven by what you would call outside of Africa, the gig economy. But within Africa, it's really formalizing and bringing into the main market people who would have otherwise been left out.
Great, thank you. Next question to Peter, and this is a question about making sure that as this questionnaire asks, the have-nots profit or benefit from investment as well. And 95% of all investment in sub-Saharan countries is in really 9 countries, which have about 50% of their population. And even in those countries, I mean, investment often benefits few people who already are relatively well off. So what is institutions like CDC doing to ensure that the have-nots in Africa also benefit from investing?
Yes, good question, Colin. And this is the challenge that internally within CDC during our investment evaluations, we're looking in terms of from the bottom, how do we make sure that CDC's capital ends up touching the have-not? Now, how do we do that? One is through the, as I mentioned, what we have done with the SMME, because the SMME, maybe to define it also in our markets, this is not, a small medium enterprise compared in the global world whereby it's a company in the FTSE 250. This is a kiosk. This is a smallholder farmer. I'm talking people that are employing 1 to 3, and most of the employees are family members. So that is the have-not, that each time we structure our trade finance facilities is to make sure with those banks that we engage with, our dollar goes to benefit the have-not. That is the indirect way. In the directly, where we make investments, we make sure that the employment of people, of the companies that we work with, both direct jobs and indirect jobs end up benefiting the have-not, because there is no way Africa will grow without the people that are being left behind. So our investments in M-Copper, they are benefiting people that if they were to wait or can afford the national grid connection to power, they'll have to wait for lifetime. But that's how we make sure that our investment end up benefiting both the have and the have-not.
All right, thanks for that example. I think last question for Frannie. So Frannie, this question asks that based on your unique experience of having worked both at the World Bank and now as a sort of practicing private investor, a comment on DFIs. And what do you think are 2 or 3 things that the DFI community needs to do differently coming out of COVID-19 than perhaps the way that it operated and thought moving into COVID-19? So give us some suggestions of how we can improve.
I think I've been very privileged to work in those 2 worlds. And so being loyal to my former organization and the family of DFIs, but also helping to share examples of what I have learned now working on the continent and as an individual investor. I think there are 3 things DFIs could post-COVID that would be very, very helpful. The first one, of course, is the future of work, because what COVID has done is it has forced all of us to think about how we could work differently, because we've been cut off from being able to travel and visit and see with our own eyes what is going on the ground. And that has forced us, therefore, to actually trust and learn from context. And if you look, for example, at Africa vis-a-vis the DFIs, through video conferencing, telephone calls, and emails, and having teams working on the ground in Africa and connecting up to the capitals, whether in Washington or London or elsewhere, you have an opportunity to actually build those trusting relationships, extract local knowledge, and combine it with global expertise. And that, I think, is going to be a main driver of innovation and opportunity going forward. The second, I think, is speed. When I looked at how quickly the multilateral development banks and the DFIs came together to provide solutions, for instance, for SMEs in Africa, the speed at which that could be done by restructuring portfolios, reallocating and refocusing resources could not be done by a smaller or local entity. It was much easier that it was done at the multilateral and at the individual DFI level. So the local national banks, the commercial banks, and other non-financial institutions that are investing in Africa benefited from that, because that could be done very quickly. And even the solutions for the vaccine also came up very quickly because of the coming together of international players. The last thing I would say is to support innovation and then to help good ideas get to scale. Because innovation is costly, and therefore if there's nobody out there to seed it and to give it the venture support, it sometimes would never get off the ground. So I think this is a very critical role, especially with all the two other factors that I mentioned, learning from the ground, supporting those ideas with seed and venture capital, and then helping them get to scale. And I've come across many things that CDC is doing, including in my previous job at TDB, where you came in to support a financial institution that's working on a regional scale to allow it to actually do those kind of things. So looking for partnerships between the international financial institutions and local banks and local and regional financial and non-financial institutions, I think is key. So those would be the three things I would say.
Great suggestions for us moving forward. Let me see if I can summarize for our audience a few of the ideas that we've heard today. And really, to me, they seem like variations on the theme that in crisis, there is always opportunity. And I was struck by Frannie's description of the COVID challenge in Africa as already promoting all kinds of innovations, as vibrant businesses are finding new ways of doing business that not only accommodate the challenges of COVID, but also lay a foundation for an improved way of doing business going forward. And we heard that in a number of different varieties. We heard about it in kind of energy, in power, in housing, in infrastructure, in digital. But one theme that came out is the importance of SMEs and the importance of innovation. And both Peter and Frannie kind of took a broad view of innovation, that we don't only need to be innovative in our business models, but we have to be innovative in the way that we provide capital. We have to be innovative in the way that as investors, we think about risk, we think about climate, not as a limitation, but climate as yet another type or variety of opportunity. So I found this to be a very positive message on both sides, and I was really welcomed the finish of two great messages of hope. Africa certainly is a land of opportunity and has a very promising future. To wind up the event today, first of all, join me in a virtual round of applause for our two speakers today, Frannie and Peter. I'm afraid that is all that we can offer you in these COVID times. And I hope that all of our listeners and viewers join us for our next Insight event. And until then, have a good day.